Hi trader, Tina here once again from shortmetina.com, and in this video I'm going to go over and discuss what I believe are the 3 pillars or foundational principles of successful trading. In my opinion, to be a successful trader, you need to know and have all 3 of these parts down packed. Again, it's not safe or okay to have 1 or maybe even 2. You need to have all 3 to make consistent money in the stock market. Okay, before I identify what these 3 pillars are, just so you can know where I'm coming from when I say foundational principles or pillars, it is fitting to insert really quickly the definition of pillar. Pillar is defined as a person or thing regarded as reliably providing essential support for something. So essentially what that means is the 3 things I am about to identify will provide support and is essential to your trading success. Support being the operative or key word in that definition. You then ask, Tina, what are these 3 pillars to successful trading? The first pillar is there to address the traders who email me saying, quote, I would like to know at what price point should I buy a stock, or for the traders that are looking for what type of stock to buy, end quote. At the heart of what they are asking about is strategy. The first pillar then is method. What is a method? A method is defined as a particular form of procedure for accomplishing or approaching something, especially a systematic or established one, or orderliness of thought or behavior, systematic planning or action. Okay, that may have been a bit confusing, but simply put, in regards to your trading, your method or methodology is essentially your roadmap or blueprint for navigating the stock market. It is a system or a set of rules that you follow consistently day in and day out when trading. For example, a part of our methodology in the Short Me Tina community is to only trade setups or patterns we are familiar with. One of the patterns that we trade in the Short Me Tina community is the channel or range. In addition to that, we trade another 9 or so patterns. We don't deviate from what we know. With the exception of the occasional moving average, we do not trade based on technical indicators. For example, Bollinger Bands or Elliott Waves is not a part of our methodology. However, it may be a part of yours and many other traders. Let me give you another example. A part of our methodology is never risking more than 10% of our trading capital on any one trade. Others may think our allocation is too conservative and may be comfortable risking 20% or more. Again, your methodology is a set of rules that helps you navigate the stock market successfully. In the above examples, I gave you 2 of ours. Ask yourself, do I have a system or method for trading the stock market? If the answer is no, then we've identified one of the reasons why you're not achieving the success you want. If the answer is yes, then you should be able to list them and to discuss them with clarity when asked. This brings me to my final point. Your method, aka trading system, should be back-tested and should be known to produce positive results over a period of time. If you do not have a system in which you approach the stock market, chances are you're failing. If I ask you what your methodology is and you can't explain it to me in simple terms, chances are you're failing. Successful traders have a methodology or method in which they navigate the stock market, and you should as well. If you do not have one, today is the perfect day to begin formulating one. To recap, we now know that to be successful in the stock market, you need to have a method or methodology that is back-tested and proven to provide positive results. This system is your roadmap, and it should be followed at all times when trading. Pillar number 1 is method. Pillar number 2 is money management. You can't control the stock market or where a stock goes, but you can control your own money. I see money management as managing your risk in the stock market or managing your downside. There's a ton of ways to do this, and we address this in our trading course, The Ultimate Swing Trader, but money management is essential to successful trading. At the core of money management is do not lose money. This theme has been echoed amongst the greats like Warren Buffett, Jesse Livermore, Paul Tudor Jones, William O'Neill, and many others, including Short Mitina. Here are a few quotes from the greats in regards to managing money in the stock market. And by greats, I mean traders that have made not thousands or hundred thousands, but individuals that have made hundreds of millions of dollars in the stock market. Example number 1 comes from Michael Marcus. And in terms of managing risk, he says, perhaps the most important rule is to hold on to your winners and cut your losers. Both are equally important. If you don't stay with your winners, you are not going to be able to pay for the losers. Example number 2 comes from one of my all-time favorites, Paul Tudor Jones. And on managing money and risk, he says, don't ever average losers. Decrease your trading volume when you are trading poorly. And example number 3 comes from Ed Sakota, and he says, the elements of good trading are 1, cutting losses, 2, cutting losses, and 3, cutting losses. If you follow these rules, you may have a chance. As you can see, money management or managing risk is a central part of successful trading, and it's revered as one of the key principles to successful trading. So if you want to be successful in the stock market, ensure you're paying attention to your money management principles. This isn't sexy, not sexy, but it will help you. What are they? Again, as with your method, you should be able to identify your money management principles, list them, and speak on them with clarity. Pillar number 1 is method. Pillar number 2 is money management, and pillar number 3 is mindset or mental discipline. Pillar number 3 is by far the most difficult to grasp, in my opinion. Out of all the 3 pillars, this is by far the most difficult to conquer and the one I give the utmost attention to, and the one that's a primary focus in our trading course, The Ultimate Swing Trader. In order to truly succeed in the stock market, you need to have mental discipline. This is also referred to as trader psychology. Mental discipline, in short, is having the discipline to follow through with your trading rules at all times, and a way to control the emotions that inevitably come up when you're trading. Really quickly, what are some of the emotions that come up when trading the stock market? One of the most common ones traders experience is fear. Whether it's fear of missing out on a trade or fear of your profits disappearing, fear is a common emotion in trading. How do you respond to that? How do you deal with that emotion? Fear isn't the only one issue that creeps up when trading. It's not the only issue. Traders deal with greed, overanalyzing a trade, seeing a trade but being unable to pull the trigger, essentially being paralyzed in the markets, seeing a stock of theirs go down and not knowing how to respond, again, being paralyzed, having set rules in place but do not have the discipline or the resolve to follow them. As you can see, there's a lot of scenarios that present themselves in the stock market that can affect your mental energy in an exhausting way. Being able to successfully navigate those emotions can be tricky, but it is important in becoming a successful trader. It isn't enough to say, be emotionless. This is almost impossible and goes against our natural human tendencies. So they will come up. They are unavoidable. The trick is knowing how to effectively manage them so they don't impede on your trading performance in a negative way. To sum up, take a hard look at your trading performance and your approach to the stock market. Do you encompass the 3 pillars to successful trading? I hope this video was helpful. If you have any questions, be sure to contact us at tina@shortmetina.com or support@shortmetina.com.